Hello, it's Trevor Cutmore. Welcome to my YouTube channel. I really hope you're enjoying the series of videos that I do Monday, Wednesdays and Fridays. And this Friday is the launch of the development series. So subscribe, get a notification and share with others, and so you can keep up to date on not just the development but on other things I'm talking about. Now today, what we're talking about, the capital gains tax, CGT. What's going on? Look, the government have spent an awful lot of money. I think it's fast approaching £1 trillion, fast approaching, not quite there yet. But they're producing papers after paper, and this paper that has been submitted to the government, hundreds of pages long, and it's talking about capital gains tax. And there's quite a few things in there. So look, let's just dispel one thing. If you're new in property and you bought property in a company, don't worry. CGT does not apply to limited companies. You come under corporation tax, which is currently 19%. That should come down to 17%, but watch my words. I actually think it's going to go back up. I think they're going to readjust that because they've got to pour some more tax in. But CGT is a very serious thing for many people. That's not just in property, it's across the board in businesses. But let's take property and what that means for you and me. You will find an older generation of people, and some people actually going into property now, buying investment property in their personal name. Bah, mustn't do it. Look, you must take some professional advice to your accountant, because the accountant will know your personal circumstances. Now, if you're not having a mortgage and just putting cash in, then in some cases it might work, but you need to sit down with a property accountant and go through the numbers and see which way it works for you. But so if you're not taking on lending, it might be appropriate to do it in your personal name, but that's specific to you and the advice from your accountant. But in most cases, in 99% of people, if they're investing by taking on lending, they should be buying in limited companies because of clause 24, which the government brought in just over about 2 years ago now, which meant, no, more than that it is. But now we're at 100%, that any mortgage interest that you're paying is not written off as a cost. It is now deemed your income, so you pay tax on money that you're actually paying out. Work that one out. It's a real nasty one. But not only that, but the rate of capital gains, they're looking at growing and widening. It's quite frightening, some of the things which are in this document. One of the things is inheritance tax, and what can you do with inheritance tax? You normally CGT would die and inheritance tax would jump in. They're now considering keeping CGT and inheritance tax. That would be a nightmare. That means that when, you know, if I had a lot of properties in my personal name, then that would actually most likely pass a debt on to my children when I go. So what do we do? It is a difficult one. It really is. If you own property, now look, please, I'm not an accountant, so whatever I say, please go and get professional advice regarding your personal circumstances. But if I own personal property in my own name, and I've had it for, let's say, 10 years, let's suppose I bought a house and it was worth £100,000, and today, you might have bought it 20 years ago, today it's worth £500,000, and I've got a £400,000 uplift. What the government have always said is that they want a slice of that capital gains tax, so it's a profit on anything over and above the 100,000 less I've spent, and I get a small relief. It's about £12,000 relief, but above that, and let's just for argument's sake say I've got to pay 20% on capital gains on 400,000. That's 80,000. I get to keep 320,000 profit. You can see how that works. If you own a property like that in your personal name, what can you do? Well, what you could do, if it's just you and not your wife, and you are married, or husband, or the other way around, either way, you can give it to your spouse, and that's a really clever one, because CGT does not carry to your spouse. If you've got just a partner, I'm sorry, if you're not legally bound, then CGT comes in. But if you own it and it belongs to you, you can actually sign the interest across. You haven't got to change the mortgage or anything. You can sign it across. You can actually use an option agreement, to be honest. But they can now have it at 500,000. That's to them. They can sell it and there's no tax. How about that? The other thing I want to talk to you about is for all those people who are now starting to sweat and say, my goodness, I've got 20 properties in my own name, what can I do? Well, there is one other thing you can do regarding the Section 24, and that's to convert some of the properties into service accommodation. If you do that, it comes under holiday let business and you no longer come subject to Section 24. However, you've still got the problem with this CGT, and what do we do? Some of the people that I mentor, and you know, I get them to speak to their tax accountants, etc. But it seems to be the most advice that people are getting, the best advice people are getting, is to start to put across your personal properties into a limited company. Now that could be very, very costly for a lot of people. But once we get past, what we're looking at is the next budget in March. If they bring in these new rulings, there's nothing to say that they are going to, they're discussing it. But they need to start to think about how they're going to claw this debt back on the nation. So I would be seriously considering now putting my personal portfolio into a limited company. And if you've got enough equity in those, that can swallow up tax payments and stamp duty payments. Remember, if you were to do it before the 31st of March, you're saving on stamp duty because there's this relief now on stamp duty until 31st of March. I do suspect that that stamp duty may well be extended for another 6 months or so. But let's watch this space. Look, I hope that you found this little bit of information about tax and where we're going with it useful. It is something that you need to be very, very wary of. Tax is something that brings a lot of people down to the ground, and it has ruined a lot of people. Without proper tax planning, it can be really, really bad. Lastly, I want to talk to you about in your limited company. What do you do with your limited company? So as we go forward and when we die, there's more tax liabilities, etc. And the more wealth we create, even if you just buy property and don't do anything with it, you're accruing wealth. I know we're coming into a dip, but over a lifetime, properties go up significantly. So you're growing wealth. What do you do? Well, this is something that people are starting to talk about now. I started talking about it about 2.5 years ago, almost 3 years ago, with Mark Barrett. And we talked about this at the Clapham property meet, which I ran there with Jeroen, and we talked about freezer shares in companies. Maybe you've never heard of a freezer share. Let me give you something. Go and speak to your property tax accountant, talk to them about freezer shares. What do you do by creating freezer shares to protect tax liabilities in the future in your company? And so that's a really good tip. Obviously, make sure that you're not going to curb or stop any lending once you're changing some sorts of shares in your portfolio, in your limited company. That's very, very important. So if you're going to go down the route of setting up freezer shares and other shares and doing tax planning in your limited company, but you want to progress with lending, make sure you're checking both sides, because one side is going to sound absolutely fantastic. If you do that, might you not be able to get lending anymore? You need to marry those two up before you do it. Guys, I hope you enjoyed it. It's really, really important. Understand what's going on in tax. I wish you a wonderful week, and watch out. Friday, 5 o'clock on this channel, you're going to see the start of a property journey, and I will be doing the first video 5 o'clock Friday. Take care. Have a great week. God bless you. Bye-bye.